Okay, we are now live. Hello, Jeannette Hartmann. How are you doing this morning?
I'm good, Roy. How are you?
Fantastic. Jeannette with American Pacific Mortgage, Roy McCann, Calnev Realty. Jeannette, just reading the reports this morning, the market continues to sizzle. Unbelievable. Price of lumber's gone up, price of framing's gone up. All the new builders are all making money. I mean, selling homes right now, it's one of the easiest and one of the hardest things to do right now. This market is absolutely incredible. We talked about it before. Have you ever seen anything like it?
No, I have not. Not coupled with, no, I haven't probably at all. And then couple it with interest rates, which have gone up as well. So.
Yeah. Exactly. And again, I want to talk today about something that's really important. People are trying to get into homes. We know about the multiple offers. We know about how terrible it is for some buyers right now to compete. Almost the first question every listing agent has is, how much are they willing to pay over the appraisal price? It's that crazy. But for a lot of buyers, sometimes that are starting out, maybe first timers, and they're looking for that incentive to get into the market right now. We want to talk about something that's really important this morning. That's the down payment assistance programs. Can you explain, first of all, Jeannette, what the down payment assistance program is?
Absolutely. So we've got several different options. Each one has their own little twist. Some will allow one thing, but not another. But what the down payment assistance is it's programs that help cover the down payment. Oftentimes it's in the form of a second mortgage. Sometimes the second is forgiven. Oftentimes they have 0% interest, but typically they don't have a payment required as long as someone owns their home. So, or as long as they have that first mortgage, I should say. So if they sell the house, they have to pay the down payment assistance off. If they refinance, they have to pay it off. But it's a great option to help people get in. And sometimes we're using it, like you said, Roy, we're using it when someone needs to bridge that gap. Maybe they have the money for a traditional loan, but the appraisal doesn't come quite in and they're now short $5,000, $10,000. We can switch to a down payment assistance program, have that little silent second on the back end to help cover that gap for them so that they don't lose out on a property if they don't have the ability to bring in the extra funds.
Is there a length of time that the down payment assistance program goes away, that money that needs to be repaid? Do they have to own the house a certain length of time, or does that not come into it?
You're referring to probably some of the special grant programs. So a grant would be different than down payment assistance, but the true down payment assistance, it's just a second mortgage and it mirrors the length of the first mortgage. So as long as they have that first mortgage, that second mortgage is in place.
Do all lenders offer them?
No. You have to go through some special training and not all companies will offer them. So we work primarily probably with our company works with a ton because we're licensed in almost all states. And a lot of them are state specific. So I probably have about 3 of my down payment assistance programs that are my go-tos that are not county specific or city specific because those funds tend to go super, super fast. So if you've got somebody that's using one of those specialized grant programs, it can be here today and gone tomorrow, and that's difficult to do. Or somebody looks for a grant in a specific city and then they buy in another city and then it's not eligible. So the ones that we're going to talk about today are California specific, and there's going to be other ones in each state that are probably very similar.
Do you have to be a first-time buyer to qualify for down payment assistance?
Some of them you do, but not all of them. So again, each program is a little bit different. So some of them require that you are a first-time home buyer, and the definition of that is that you haven't owned a home in the last 3 years. So it doesn't mean you can never have owned a home, just that you didn't own it in the last 3 years. Other ones require that it's your primary residence, and you can even own another property at the same time.
Okay, Jeannette, I'm sure this applies. Are there income limits on who can get the down payment assistance?
For some of them do, and some of them don't. So for example, one of my programs, there's no income limits at all for FHA, but there are some income limits for conventional loans. The other program that we do a lot of does have income limits, but they're pretty high. Like in Riverside County, it's $149,000 a year. In San Diego County, it's $183,000 a year. I mean, that's some pretty substantial income that you can make and still qualify for the down payment assistance. And then each one, again, has a lot of overlays. So if you make too much and you still need down payment assistance, then you might have to have a higher FICO score.
Okay, do you want to talk about FICO scores? Are there requirements on those from the lowest to the highest?
Mm-hmm. So again, depending on the program, probably my highest requirement would be for one that is going to exceed the income limit. They would have to have a 680 FICO score. Other programs will give you better pricing if you have a 680 FICO score. The lowest that you need is a 620. And for a lot of my programs, it's 640. So again, each one has their own little nuances. And when we get someone that needs down payment assistance, we have to plug in all the factors and then see which programs are options for them.
In Murrieta, as you know, and we have some clients that often purchase manufactured homes there, particularly up Murrieta, Hot Springs, and a few other areas. Does the DPA, down payment assistance programs, apply for manufactured homes?
One of them will allow them, one of them won't.
Okay.
So again, I have to plug in which program will allow it and then make sure that the program that allows the manufactured homes requires that you're a first-time home buyer. So you have to meet all of those different criteria for each program that you're looking for.
Are they harder to qualify for DPA assistance and traditional financing?
One of the programs is a little more restrictive. So one of them is a hard 45% debt to income ratio, and it's not 45.0001, it's 45%. The other program is not. It doesn't have, well, it does have a little more restrictive than a traditional FHA. FHA limits, we can get approvals with a back-end debt ratio, which includes all somebody's other expenses, up to maybe 57%. With the down payment assistance, it's limited to 55%. But still, a lot easier to qualify for than they were in the past.
Just wanted to ask you a quick question, because I do know, because I have worked with some down payment assistance program buyers in the past. Is there an education requirement?
One of the programs there is, one of the programs there isn't. So the one that requires that they're first-time home buyers does require them to go through a course. The other program does not.
Okay. We all know we've been impacted financially. Can you have a co-signer on a person who doesn't live in the property?
One of the programs you can, one of the programs you can't. So, that's where, like, I just did one that was for a manufactured home with a non-occupying co-borrower, and we were able to do it under one of the specific programs. So we have to put all the requirements out there and see which way we can go. Okay.
Back to this one here. That is, will the DPA cover both the down payment and the closing costs? And you want to explain the difference? Go ahead.
Sure. So the answer is theoretically they can. However, down payment assistance programs are a little bit more expensive. Most traditional loans, when we're doing them, either FHA or conventional, we're able to do the loan with 0 points or 0 origination fee. On down payment assistance, there's always going to be an origination fee. And depending on the program, one of them is a 2% origination and one of them is a 3% origination fee. So it gets a little more difficult to cover. You can cover the down payment. Sometimes I can cover part of the cost for the loan, but it's very difficult to cover all of the costs for the loan. Now, the one thing the down payment assistance programs does allow, they don't care who pays the other costs. So the seller can pay for the closing costs. And good luck with that in today's market. But theoretically, the seller can pay the closing costs. And we closed one 2 weeks ago where the seller, and it was out in, it was a super remote desert community. I can't even think of the name of it. It's not Palm Desert, but it's even further out. Borrego Springs. And the agent negotiated, it was a $540,000 purchase price. So down payment assistance was okay with that. We didn't have income restrictions, and they got the seller to pay $15,000 of closing costs, and it covered everything. He walked out, he brought in a $5,300 earnest money deposit, and he got every penny of that refunded back to him.
Wow.
Now, that is not typical. That is not easy. The agent chipped in a little bit. Everybody chipped in a little bit, but yeah, ethically, I'm kind of like, you're buying a $500,000 house with nothing. That's just not right. But it can be done, and we did it.
Well, congratulations on that. That's a great story. And yeah, and in a real estate transaction today, you need a team. You need everybody to be willing to work together. So that's a Hartmann story. One of the questions I have regarding down payment assistance programs, does the loan take longer to close and the whole transaction take longer?
In the past, I would have said yes, because the primary down payment assistance program that we used then required that after our company did all the underwriting and did everything, it went to the agency that's giving the down payment for their final blessing. And in a different market, when it was very common to get seller credits, there was a big backlog. And so it would take them, 3-4 days at the very end for them to sign off and bless the loan. And they are actually they're not re-underwriting, but they're recalculating income, because that program is one that had income limits, and they calculate income different than how we calculate income. They're actually looking to make sure that you don't make too much. So when we're using, for example, commission income, I'm using a 2-year average, and they're using the most current average. So those loans did take a little extra time, and a lot of agents still remember that. But the primary loan that we use now for down payment assistance doesn't require that it goes for any second signature, so it doesn't take any additional time. So that's a good thing.
Good. I know you never like to talk about interest rates, because there's many factors, as you keep telling us, that go into determining an interest rate. But I have to ask you, are the interest rates on DPAs higher than what you would get on a traditional?
Probably, yes. And the down payment assistance rates are actually set. They're not set by the individual lender. They're set by the agencies. And the way that they work is that depending on how much assistance you need determines what interest rate you're getting. So the more assistance, the more money you can bring to the table, the better your interest rate's going to be.
I hear you. I know you're closing loans galore right now. Connor McCann's down in San Diego right now, taking a listing on a condo, $600,000 for a 2-bedroom condo. Unbelievable. We're closing up new homes next week in KB Homes out in Inspirata here in Vegas. And it's just a crazy market. But let me ask you, with these offers coming in today, will a down payment assistance offer with DPA reduce the chance of an offer getting accepted in today's market?
Maybe. So what I do whenever one of my agents is writing an offer is I'm going to call the listing agent, and I'm going to brag about my client. And I'm going to brag about myself too, because like you said, Roy, it takes a team. And so I want them to know that I've got 30 plus years experience, and that I've closed down payment assistance loans, and I want to talk to them and find out what their experience is with down payment assistance, and let them know that they don't take any extra time, and I don't need their seller to pay anything. And if I can talk to the agent and explain all that, they've got a good shot. But like you said, in today's world, people are coming in with over list price, and they're bridging the gap, and they're saying they'll waive appraisal contingencies, or they'll pay $10,000 or $20,000 over the appraisal if it doesn't come in. And then that's going to make your down payment assistance people a little bit harder to compete with. But the good thing about our industry is that if you blink, the industry can change. So, what's true today may not be true next month or in 3 months, and the market could shift, and we could have more buyers out there and more inventory. And then all of a sudden the down payment assistance offers don't look so bad.
No 2 days are the same in this business. What keeps us,
Absolutely.
I'm telling you, and that's why we love it so much. Jeannette Hartmann, our numbers are for all you need to know about down payment assistance programs and getting qualified, getting your offer accepted, having somebody to go for bat for you. Give her a call. Jeannette, thanks for joining me this week, and we'll see you next week.
You got it. Take care, Roy.
Bye.
Bye-bye.